Are you curious about the future of the Texas housing market and how inflation affects your pocket?
Absolutely. We've compiled insights from renowned experts like Cathie Wood and Jerome Powell, who are here to give you the lowdown.
That's right. This video delivers cutting-edge analyses and strategies that could help reinvent how you manage your investments.
And the best part? We break down every crucial point so you can make informed decisions without losing hours on research.
Welcome to our channel, where education meets actionable insights on finances and entrepreneurship.
Let's kick things off with Cathie Wood discussing the current state of the Texas housing market.
And don't go anywhere. Up next, we will hear from Jerome Powell on interest rates and their influence on the market.
And finally, Kristina Smallhorn will share unparalleled insights into cash flow management and rental investing.
Just a quick reminder, this content is for educational purposes and not investment advice. In today's competitive landscape, understanding the secret to a successful business is crucial. Ken McElroy unveils insights from his vast experience.
Absolutely. He introduces the BI triangle from Rich Dad Education and shows why it's fundamental for business resilience.
But how does one even begin to understand this BI triangle?
Great question. Let's unravel Ken's key insights into the business framework.
Ken's core message stresses that many entrepreneurs fail to build a true business. They merely create jobs for themselves.
Exactly. And the BI triangle helps clarify the essentials for a thriving business model.
What are the main components of this triangle?
Ken outlines that businesses must focus not just on products, but on establishing legal, systematized, and communication structures.
Ken highlights that legal agreements are critical. Without them, businesses risk losing money and customers.
True. A strong contract ensures that both parties are on the same page.
So, is it safe to say that contracts are akin to safety nets for businesses?
Exactly. They secure relationships and financial transactions, making operations smoother. Ken emphasizes that efficient systems streamline operations and reduce reliance on any single individual.
Without systems, businesses can become chaotic. Everyone falls to one person's capabilities.
That makes total sense. So where do we start implementing these systems?
Begin by identifying the key functions and documenting standard operating procedures.
Ken illustrates that effective communication is not waiting for customers to come, but actively reaching out.
Exactly. Proactive communication can significantly improve customer retention.
So is this about how businesses market themselves too?
Definitely. It's about creating relationships and maintaining them with clear messaging.
What does Ken foresee for the future of businesses?
He predicts a rise in entrepreneurs adopting integrated models to ensure sustainability.
That makes sense. A smarter approach could be vital in the next economic cycle.
Absolutely. Businesses focusing on systemic foundations will likely thrive. In summary, Ken stresses that the integrity of a business goes beyond just the product.
Indeed, a focus on these foundational elements will significantly increase business resilience.
What actionable steps can budding entrepreneurs take right now?
Immediate steps include drafting legal agreements and outlining operational systems.
Up next, we're exploring major problems with Trump's Department of Government Efficiency with expert insights from Steve Hanke.
This next discussion promises to unveil intriguing challenges within the government sectors.
You won't want to miss that.
Elon Musk and Vivek Ramaswamy are tasked with a tall order, making government more efficient. What does Steve Hanke think about this venture?
Hanke has a strong track record with government efficiency, but he's not optimistic. He argues government inherently lacks the profit-loss incentives that drive efficiency in private sectors.
Sounds like a battle against a bureaucratic monster. How feasible is this really?
Let's dig into Hanke's insights.
Hanke believes the very essence of government, its structure and the lack of accountability, works against efficiency.
Isn't it ironic? They're trying to apply business principles to a system where traditional results-oriented strategies often fail.
So are they just doomed to repeat the same mistakes?
Well, a lot will hinge on whether they can truly dismantle layers of inefficiency and who leads the charge.
The very name Department of Government Efficiency strikes Hanke as ironic.
Can anything actually be efficient when accountability is so low?
Exactly. In private business, failure has consequences. In government, it's just business as usual. Reducing personnel numbers sounds good on paper, but it's a political minefield.
Why is it so much easier to cut jobs in the private sector?
Because in private companies, it's about survival versus profit. Government doesn't operate on that principle.
Hankey emphasizes that to shrink the government, they need to sell off non-essential assets.
He recalls the difficulties faced in previous attempts at privatization during the Reagan era.
It seems like a constant battle against regulatory inertia. So is deregulation the first step in this effort?
Absolutely, but breaking down those barriers won't be easy.
Hankey notes that changes meet fierce resistance and must be navigated carefully.
Hankey warns that sustained political pushback could largely impede the success of these initiatives.
Musk is used to running companies. This feels like a completely different ballgame.
Will they even cope with the compromises and slow pace ahead?
Only time will tell, but it's a daunting challenge. Hankey leaves us with a motivational note. Change is possible, but it's met with undeniable hurdles.
And if lessons from history are our guide, strategic and cautious movement is crucial.
America needs to recognize the balance between efficiency and preservation of essential services.
Today, we're dissecting the disastrous effects of dam failures in western North Carolina.
Abby shares vital insights on how these events spiral into larger economic and community issues.
Mitch adds a perspective on real estate implications and personal safety in disaster-prone areas.
Let's set the scene with a brief overview of the catastrophic flooding. The recent flood was no accident. It was influenced by systemic failures.
Right. The lack of foresight in dam management brings serious accountability issues.
So, is this about negligence or is it something more sinister?
Helen argues that water was poorly managed, leading to a disaster.
Exactly. It appears contingency protocols were non-existent.
And now, towns are devastated with the loss of homes.
Abby highlights how community efforts significantly outpaced government responses.
It's tragic, isn't it? Those with authority are avoiding action while locals try to rebuild.
What are their motivations behind the inaction? It feels suspicious.
Mitch raises critical points on how this impacts future homeowners.
Correct. Knowing flood risks is essential for prospective buyers.
Shouldn't there be more regulations to protect consumers in these areas?
What can we expect moving forward in terms of policy changes?
Increased transparency is a must. Communities are demanding accountability.
Above all, this should serve as a wake-up call.
It's clear we must learn from these disasters.
Absolutely. Proactive measures can save lives and property.
Let's hold leaders accountable.
Coming up next, don't miss our analysis on the bumpy housing market forecast for 2025. According to Zillow, the housing market is poised for a bumpy ride in 2025. Let's unpack what this means for buyers and investors.
Absolutely. There's a lot to cover, from foreclosure spikes to the intriguing economic trends that could impact the market.
It sounds serious, but what are the main drivers behind these predictions?
Let's dive into the details, starting with those startling foreclosure rates.
The core takeaway is that rising inventories and unexpected foreclosures could create unique opportunities, but also risks.
Exactly. If buyers are prepared to navigate these changes, they could benefit significantly.
But aren't there risks with foreclosures rising so steeply in unexpected areas?
Definitely, it's a complicated landscape requiring careful consideration and insight.
Kristina highlighted that North and South Dakota have bizarrely high foreclosure rates right now.
What could be behind such a startling rise?
It's puzzling, especially given that recent reports suggested robust housing markets in these states.
Who's looking into these numbers? It clearly warrants more investigation.
Zillow forecasts home growth of about 2.6% in 2025.
That's interesting, but with a potential economic downturn looming, could that number change?
More inventory is great, but does that truly benefit buyers amidst rising prices?
Exactly, it's a balancing act that everyone needs to consider.
Might tariffs spike the costs of building materials?
It's not just possible, it's likely, and that could squeeze affordability even more.
So, homeowners looking for lower prices might be disappointed.
Unless significant new policy changes occur, absolutely.
How do you see tariffs impacting housing moving forward?
Increased costs will inevitably lead to higher home prices unless something shifts drastically.
That could create a bottleneck effect for buyers. Is it time to rethink strategies?
Yes, adaptability will be crucial in this climate.
The key takeaway is to anticipate and adapt to these market shifts.
Proactive measures today can safeguard against the unpredictability of tomorrow.
What should potential investors focus on moving forward?
Investors should target markets showing resilience despite challenges.
Next time, we'll dive into investing strategies that could mirror getting into Airbnb back in 2012.
With insights from Jeff Hurst, CEO of Furnish Finder, this will be unmissable.
Stay tuned. It's a conversation you won't want to miss.
Today, we dive into the midterm rental space, a realm filled with potential but shrouded in mystery.
And who better to shed light on it than Jeff Hurst, whose data insights are invaluable.
I've heard a lot about midterm rentals, but what exactly do they entail?
Excellent question. Let's get started.
So essentially, Jeff argues midterm rentals are not just a trend, they're a sustainable investment model.
Exactly, especially in today's volatile housing market.
But how can investors identify good opportunities?
That's where Jeff's insights on market analytics come into play.
Jeff notes that his platform has seen an explosion of demand, over 300,000 listings.
That's significant. Are these rentals replacing long-term options?
Yes, many long-term rentals are transitioning into midterm models as landlords adjust. The ideal midterm rental tends to be smaller, targeting individuals rather than families.
Interesting. What makes these properties so appealing?
Is it just the price point?
Price matters, but it's also about the experience and amenities offered.
Jeff specifically points out Seattle and Nashville as booming markets.
What if you're not in a hot market?
Focus on towns with limited hotel options. That's where midterm rentals can thrive.
What does the future hold for midterm rentals?
We may see a professionalization similar to the short-term market.
Interesting. So more streamlined experiences for tenants?
Exactly. Enhanced booking systems and property management will be key. The key takeaway here is to get in early and understand your market.
Absolutely. Diligent research now can lead to substantial rewards.
Let's make sure our audience knows these insights are vital for success.
What a powerful roundup of perspectives we've just witnessed.
Absolutely. From Jeff's insights on midterm rentals to Kristina's warnings about foreclosures.
And let's not forget Helen, Abby, and Mitch diving into those critical community issues.
Yes, their focus on accountability and disaster management is so crucial.
It's clear there's agreement on the need for adaptability in our investment strategies, right?
Exactly. Yet it's fascinating to see differing opinions on how tariffs and government reforms will play out.
That's what makes discussions like these so enriching, so much to consider.
And it keeps us on our toes to stay informed. If this session helped you see things clearer, give us that thumbs up.
Yes, and subscribe to our channel for more insightful content you won't want to miss.
Thanks for being with us today. Check out our other videos for even more financial insights.